Okay, welcome to today's webcast focusing on how to apply for your government benefits. And, this kind of reminds me, the situation we're in reminds me of the situation that Arthur MacArthur, General MacArthur's dad, who won the Medal of Honor at the Battle of Lookout Mountain, once said, what do you do when asked, what do you do when you're surrounded by the enemy? And he responded, attack in all directions. So last Friday on our webcast that kind of gave summaries of the PPP and the EIDL programs, we said attack in all directions, because regardless of your situation, regardless of what's going on with your business, strongly recommend that you all apply to as many of these opportunities as possible. So again, I'm Kevin Hilton. I'm the Impact CEO, and today we're joined with the same two fine gentlemen, Matt Lesko of Lesko and Walderman, as well. That's a firm that specializes in accounting for small businesses, and Pat Carroll, the CEO of Obsidian, a firm specializing in business planning solutions. And just before we got on, or maybe if you got on early, you heard us discussing that even to this very day, the rules and regulations and guidance are changing on at least a daily basis, as opposed to last week when it was an hour by hour basis. So this is very important. I just want to remind everybody that all the resources that we provide are found on the Impact website. So that's at impact-net.org. You'll see everything on the front page, including this webcast and Friday's webcast, which you can click on and watch again at your leisure if you feel like you missed something. It'll be all right there, among other things. And that should help you through these very, very trying times. Again, just to give you some ground rules of how to conduct yourself on this, everybody other than us three presenters, myself, Pat, and Matt, will be muted. We ask that you use the Q&A buttons at the bottom of your screen. Questions and answers, click on that, type in your questions. We'll do everything in our power to get through this material and answer every question we possibly can. If for some reason you're watching this after the fact and you have a question, email CAREACT, CAREACT, at impact-net.org, which was found in your email that you registered for this on. But again, CAREACT, CAREACT, at impact-net.org, and we will get your question to the appropriate subject matter expert. And next week, we're preparing to provide another webcast on how the changes, how these benefits change your tax implications. So beyond probably the later part of next week. So with that, Pat Carroll is going to go first today. So I'll turn it over to Pat, and he'll run through the tactics of making sure your applications are successful. Pat?
Thank you, Kevin. And let me give a quick intro of our group. Overture has three partners that work with businesses to do planning. Matt Lesko is on today, and he will be speaking after I do. And I will be speaking this first, talking a little bit about how to apply for the EIDL, the Economic Injury Disaster Loan, based on some of the information we got off the survey from the last call. A lot of people have not been looking at this particular program because of all the stuff we see about the PPP. Our feeling is everybody should be applying for both of the loans. Just a little bit of background on the EIDL. It is a program that has been around for many years through the SBA, but there have been some interesting changes that apply particularly to coronavirus. And so you know, if you've got a business with less than 500 employees and you've been in business since January 31st of this year, you can apply for this loan. You can get up to $2 million, and as well as a potential grant of $10,000. You must have suffered substantial economic injury, and I don't think there's anybody out there who really hasn't. But if you haven't, you cannot apply for this particular loan. The interest rate on it is 3 3/4%, and you have, depending on the application and the SBA's approval, you have up to 30 years to pay it back. The program itself is very easy to apply for, at least from the appearance of what we've seen on the website. Let's see if I can get this to move. There we go. Write this down. This is where you will go to apply for the loan. Unfortunately, there is no actual application that we can show you. We've gone on and we've pulled screenshots off for the program itself. We have those in a handout that we can send to you. Matt will give you the email address to send an email to, and we can send you the full screenshot of every one of the different screens. That will give you some help as far as what you need to put together. I'm going to show you partial screenshots. They were so long that if we had put them on this presentation, you would not really have been able to see it. So going to this location, you will really not need a tremendous amount of detailed information to do the application. The first page you will come to is the disclosures page, and here you need to attest to certain facts. You have less than 500 employees. You have not committed any particular criminal event. I actually have the whole PDF that actually asks about 15 questions, and every one of them you should be able to answer off the top of your head. If you, if you're an owner of the business, you'll know all these answers. So first page, very simple. Second page is all the business information. A little bit more technical at this point. When you see the PDF that we put together, there's certain things that you will need to have. Excuse me while I look at my cheat sheet over here. For example, you will need to know your gross receipts for the prior 12 months. You will also need to know cost of goods sold. So you should be able to pull this out of whatever accounting system or get this from your CPA. You'll need those numbers as you go through and fill it out. The other information you probably should have off the top of your head. The date business established is another thing you may have to look up. What was the date you officially filed with your state to get your business started? You'll also need to know, from an ownership standpoint, how long current ownership has been in place. And other than that, that's fairly simple. They've made the process on each one of these sections easier. I suspect, though, and I'm going to show you some other information that was required prior to March 30th, and I suspect that we will need to know some of that information at some point. Let's see, let me go back here a slide. So step 2 is business. Step 3 is additional information that you will need to have on the owners. So there are questions where if you're having an assistant fill this out, I wouldn't recommend it. I think the owner needs to be in place to make sure you can get some of the information in. So for example, they're going to ask for your social security number, your date of birth, place of birth. So generally, the owner really should be sitting in on the application, even if they're not the one who's actually running the computer. If there are multiple owners, you will need the same information for each owner. So if you have two partners, you will need to have their social security numbers, their dates of birth, their places of birth, so that you can fill it in, as well as their home addresses. So not highly detailed information, but stuff that you may not be actually carrying around in your head with you. All right, then you will be given the ability to actually ask for your 10 grand grant. And when you get to this particular page, there is a box on here. I would like to be considered for an advance of up to $10,000. This advance, the way the program is written, is supposed to be forgiven even if you are not eligible, if you're not approved for this particular loan. Now, Matt is going to be talking about forgiveness for the PPP. You cannot have both forgiven. This $10,000, if you receive it and also receive the PPP, it will be rolled into the total forgiveness. Doesn't mean you shouldn't ask for it, because there's no downside to it. You'll just get you'll get the money, and the forgiveness will be rolled into the PPP. It actually asks you for the your checking account number and your routing number for your bank. So you'll need to have that available at the time that you apply. And once again, everybody should be asking for the $10,000 regardless of whether you get approved for this particular loan or not. You're going to get that money. Now, we were on a phone call yesterday where somebody who had applied very early in the process actually had just received their $10,000. So people are actually getting money. It's not as quick as we would have liked to have seen it, but people are actually getting their money. Oh, yeah, and here it is. It shows you have to have your bank name, your account number, and your routing number, and it will then allow you to go to the next page, which actually is just going to have you double check everything and attest to the fact that you're telling the truth and you're authorizing the loan to be filed. So, you know, this is basically the under the penalty of perjury. So make sure you fill this in accurately. One of the sections that I'd like to point out, and I won't go back to it right now because we don't have the full screens, if your business is owned partially or completely by another business, you need to put that in. So we have clients that maybe own, they might have an ice cream store, and they might have a laundromat, and they might then have a plumbing business. And they're all owned by one entity. You need to disclose that as part of the application process, because what the SBA is looking for is they're looking to see whether you have a total of more than 500 employees under common ownership. So in fact, if your business is a wholly owned subsidiary of General Electric, you will not be able to apply for this loan because there's more than 500 employees there. I don't think anybody on this call is in that situation. Now, what's interesting is prior to March 30th, there was a bunch of other information that we had to provide. We have a feeling that once your loan gets to the point where you're in the system, they've given you the $10,000, they're going to come back and they're going to ask for additional information. And the SBA loan form 5, we actually have a copy of it. I'll show it to you. The tax authorization form is simple. You're just basically signing off saying you allow the SBA to pull your tax returns. The copies of recent federal tax returns, if you haven't filed for 19, they will accept 18. You should have copies of those available in a PDF form. Schedule of liabilities, basically any outstanding loans that you have. And actually, the SBA has a form that allows you to fill that in. So really, those first 4 things, most people can provide and do pretty easily and quickly. Unfortunately, the next thing, the personal financial statement, we find people have a lot of difficulty putting together, and you can get your, whatever person is helping you with your finances, your CPA, a financial advisor, can help you put that together. Now, once again, all of these items I'm showing on the screen here are not required currently for you to get your application in. These are going to be things that they will probably be asking for after the fact. So please don't hold off making your application because you don't have a personal financial statement. Put the application in now and work on getting this information together as you go forward. Once you do the 5 steps that I showed you before online, you will actually get a number that proves that you applied for your loan, and then that number will be how you are referenced as you go forward. We don't so far know of anybody who's actually received their loan yet, but it's a good sign that people are getting that first $10,000 grant to start with. This is the actual application, once again, that was required before March 30th. And it has your signature at the bottom, and we're pretty sure you will need some kind of application that looks just like this. As we go forward, the application number is right there, and that number and that application is available on the SBA website. And if you need a copy, you can always send us an email. As I said, the clients that we've been helping put together their information, they usually find this is the most difficult part of the application process. And it's putting together a personal balance sheet. On this sheet, they're asking questions that a lot of people are not familiar with. And even when we sit down with it, once again, this is a government form, we don't know exactly whether they are, what are they alluding to under certain sections here, but we can help, and we have helped people fill it in. Now, for people who own real estate, you also have to have a bunch of information about your loans, loan numbers, how many years left you have on the loans. So start pulling that stuff together. Don't wait to file your application till you have it, because you don't need this information right now. The SBA will get back to you and request this at some point in the future. And you will know when you're sort of in the queue when you get your $10,000. And at this point, I'm going to pass off the application process to Matt, who will take over and discuss the PPP process, which is done very differently because it's set up through each individual bank. And from what we've seen, the process is not universal. it's different for every bank. So, Matt?
I'm going to interrupt real quick. If you, again, just as a reminder, if you have any questions, hit the Q&A button down below. Pat's probably going to have to get off early. Again, if you have questions and you can't ask them live or you'd rather ask them offline, just shoot an email to careact, CAREACT, at impact-net.org, and we'll make sure that you get the appropriate expert response.
Thank you, Kevin. Thank you, Pat. Pat, if I could take over the screen share, that'd be great. I hope everybody can see my screen at this point. So I want to start off by saying that what we really want to try to do is demystify this application process. It can be a little daunting at first, but it's not so complicated that you guys can't jump in and do it. Some initial statistics specifically around the payroll protection application. 1 million loans have been approved as of April 13th, as of Monday, equaling $247 billion. Meaning that a big majority of the set-aside funds from the initial stimulus package have been accounted for at this time. We anticipate that by the end of this week, all funds will have been accounted for from the initial stimulus package. So if you have not done your application yet, it is imperative that you do now. Now, I don't want this to sound scary. I don't want this to sound like there's no hope for those that haven't done it. The fact of the matter is that we fully expect Congress to pass a second portion of this that includes around $200 billion more. So it is not too late. Again, I am Matthew Lesko. My firm, Lesko & Waterman, provides outsourced accounting services, bookkeeping, controller, CFO, and system implementation work for small businesses. And we are really focused right now on helping guide our clients, as well as you, the iron workers companies of in this country, and focused around how we get through this current economic burden. Now, what I'm going to do is I have this PowerPoint, but I'm going to try to go through this pretty quickly. I believe that the Q&A section is the most important part of this. But there's also some other documents that I want to bring up and show you that aren't part of this PowerPoint, that you can reach out to us through the email that Kevin keeps on mentioning, and request from us that can help very much from a component of planning for, if you haven't applied for the application at this point, planning for in calculating the payroll portion, as well as maintaining the forgiveness component so you can track that. Paycheck Protection Program, on the SBA website, you can get the actual document. Now, many banks allow you to, or have their own online system where you fill this out. You do not need to go to the SBA website to find this if your bank has the online access. If your bank does not, if your bank is a community or smaller bank that does not have an online system, you may need to get this from the SBA website. If you go to Google, if you search COVID SBA or PPP SBA loan application, you'll find it right away. This application, this is a screenshot of it. It is pretty straightforward. It does not give you the calculation component. It asks you what the average monthly payroll is. And remember, that average monthly payroll is not only your gross payroll, it's your benefits. It's the total component of the state taxes, the total component of the payroll piece on an average basis per month, and then you multiply it by 2.5. I would recommend that you select all that are associated to you: payroll, lease, mortgage interest, utilities. But this isn't going to stop you from utilizing allowable expenses. They're looking probably from a statistical standpoint what's happening. Just as in the economic injury disaster loan, it is important that you include all the owners. But please note, it's list the owners that are 20% or more. So if you have a bunch of owners that are very small minority owners, don't feel obligation to add them in here. It is not necessary at this time. And then really the application goes over a handful of questions that may or may not disqualify you. For many people, most of this is going to be pretty straightforward. They're looking for things like whether you've been convicted of crime, if you owe money, if you're delinquent with an SBA loan, and things of that nature. What do you need? And this is the real crux of it. What do you need to provide your banks? And it's a interesting question. And the reason I say that is I know what the SBA guidelines say. I also know that in helping clients, whether it's Bank of America, PNC, Wells Fargo, some of the local banks here, Eagle Bank, M&T, Capital One, that there's some nuances between every single bank that we're dealing with. But for the majority, the biggest component that we believe is important is your 941s for Q1 and Q2 of 2019, as well as Q2, Q3, and Q4, if you're going to use a calendar year, or the 4 quarters of 941s for the period in which you're reporting. I recommend having the 940. I would also recommend that you have monthly payroll statements or your payroll registers. Now, again, we can provide this list to you in a more condensed list for you to provide to the bank, but the key is to be able to substantiate the actual calculation. Many banks are currently requiring you to give a written statement on how you came up with your calculation for their records. In that case, we provide a short narrative, if you want to put it that way, as well as the actual spreadsheet calculation that we use. And I think that's very important. Again, we have spreadsheets available to any of you that request it. That will help you calculate your average payroll costs for the loan. This specific spreadsheet I cannot take credit for. This came from the AICPA, which is a governing body for certified public accountants, but can be very helpful in providing to your bank to show how you came up with the actual loan amount. I'm sorry. This is the AICPA with the loan amount. This is actually a different spreadsheet I'll talk to later. It has to do with the forgiveness side of things. But as you can see with AICPA, they give you the calculator and instructions. Now, this is not for seasonal employees and is not necessarily for independent contractors, but specific to employers with employee W-2 staff. So again, Kevin kept on mentioning the email I want to put up on the screen. You can reach out for guidance on the CARES Act, including the Paycheck Protection Program I'm just talking about, the economic injury disaster loan that Patrick talked about before this. If you were on the if you were on the webinar that we did on Friday, the employee retention tax credit is something that we can help guidance with, as well as the CARES Act business and personal tax changes. What tax benefits and tax rules and regulations have changed through this stimulus package that are beneficial to the overall business community. As Kevin mentioned, we're going to be putting a webinar hopefully on Thursday of next week that talks specifically about the business and personal tax provisions that are in the CARES Act. And this is going to get into some detail and is going to be very valuable to a lot of the people here, and may even be invaluable to the employees of the companies. And so we think it's really important that that you guys attend that from that perspective. Again, I want to quickly show you a couple things. So again, the loan calculator that I showed as a screenshot, right here from the AICPA, really allows you to jump in, and depending on whether you're seasonal, depending on if you were a newer company, allows you to put in your gross wages. Let's say you had $1.2 million of wages, and your group health insurance was, 500,000, in that period, and then we wanted to reduce that compensation, for highly earned people, so another 400,000. I can, sorry, I didn't get the 400 in there. And obviously it gets more than this. It provides that monthly average payroll cost directly onto your application. So a really great tool, and really a great thing to show as a backup to the loan that you're requesting. On top of that, something I'm really focused on with my clients right now is managing the forgiveness component of this loan. It keeps changing. I was just reading documentation on all of the uncertainty or gray areas regarding the forgiveness, and there's a lot of them. And so when it comes to our clients, we're already talking to them about, as soon as you get that money, we need to start actually allocating in your accounting system, delegating, segregating the costs that are payroll related into its own category so that we can report correctly. This might be a little bit too into the weeds, but this is the same idea as grant reporting in the nonprofit world, in which we really want to segregate those expenses so that if the bank asks for the backup, that we quickly have it and we can show that we're organized, that we've documented it. Document on the forgiveness component of this. And so we're already planning around that. When it comes to forgiveness, after that 8-week period, you have to apply for forgiveness with your bank, and there's a time period to do that. I don't have a complete guidance on what that looks like, and we're going to be doing follow-up webinars on that as well, or at least providing information, because this component, we don't want to see our clients being burdened with a loan that they could have had forgiven. Again, we also have backup information on that. If you want to come directly to us for the actual, it's not loading, of course, for the actual borrower application, we're happy to provide that to you, as well as other handouts that we have. So we want to make sure that we are completely supporting you guys and have the information readily available for you.
Okay, good stuff. Let me ask you this. You had sent a lot of our local unions and contractors use QuickBooks.
Yes.
How does that interact with these applications?
So I think on our Friday call, the question that came up of how QuickBooks is helping the clients through the payroll protection. They definitely were doing the calculation component. But it came to my attention earlier this week that they did decide they became a approved SBA lender. Now this does not change the fact that if you have a relationship with a bank that is processing the application, that you should still be going through that. That is the best recommendation that we have at this point. But if you're running into an issue like some people do with Wells Fargo or PNC or some of the other banks early on, or even Bank of America very early on, this is a good alternative to move in that direction. We can also provide guidance as where to go for that.
And we've been talking to contractors for many weeks now and getting their perspective, taking their pulse on where they are. If you're a contractor, you're in good shape, you're working all your guys, progress is being made on your projects, you can presume they're getting paid. Should they apply for these?
Absolutely.
Yeah.
No, absolutely. In fact, you're almost guaranteed then to get forgiveness on the PPP because you have all your people working, and that's one of the requirements of the PPP to have payroll up to 75%.
Right.
And now, whether you would qualify for the EIDL, you can always turn it down. If you get approved on the loan, you don't have to take the money. So worst case situation, you're going to get the PPP, even if you're doing well, and get the loan forgiven. Best case, you might get both of them, but there's no reason not to apply for both. One thing you can't do is you should not apply for the PPP in more than one location.
I think on Friday, Kevin, you said it the best. Apply, 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 apply. You know, I can't stress. I don't want to be a doomsdayer. That's not my style. We don't know what the long-term implications of this is going to be, and we're recommending that you apply for it so that if in a month, 2 months, 4 months from now, you're not the pipeline, you're estimating on projects and your win ratio on projects are going down, that this was something that could support you through that time period as well.
That's, let me throw a couple of questions from the audience. Those were scenarios that had come up in our day-to-day business life. Again, can an individual local union apply? If so, does the business manager list themselves as the owner?
So
go ahead, Matt.
So the union, as a 501c5, I'm getting this mixed up between the 3s and the 6s and the 5s, but the C5, the Paycheck Protection Program, currently does not allow. However, the EIDL, what Pat's been talking about, you can apply, and I would list the business manager as the owner.
You'd be the principal of the organization, unless I'm wrong. I'm not an iron worker. I do play one on TV, but you know, he's our go-to guy in this world. So the business manager. And of course, you know, again, if you're a business manager, district council president, a contractor, you know the email address that you can send us a question offline. Assuming,
and I'm sorry to interrupt you. One thing that we did clarify since last meeting is that the unions, the 501c5s, can apply for the employee retention tax credit, which we're not talking about today, but that piece, and I'm sorry to interrupt you, Kevin, but I wanted to throw that in there. That, I think, is something to jump on right away.
Just repeat that, because I think I may have been talking. What should they absolutely be applying for if you're a local union?
It's not applying, it is preparing for the ERTC. And again, you have to show that you have a 50% reduction in revenue, some things of that nature, if it applies. And we can, if you guys have any questions directly for us, you can use the CARES Act at impact-net.org. And I'm happy to go sort of more deep into it with the individual unions themselves. There is some very specific things around that component that could be beneficial. The PPP is not. There's some other things that I believe can be done.
ERTC stands for?
Employee Retention Tax Credit.
Okay. The next question, assuming most of the workers for a particular company are hourly wage iron workers, how does that dynamic figure in? If this loan is received and there is no more work available, what activities can they perform?
I guess that depends on which loan you're applying for. If you apply for the EIDL, there is no requirement that you have to keep employees working to get that loan approved. That loan is based on economic hardship for your firm, and you should definitely be applying. In fact, we've had people who flat out said, look, we don't have the people working. We're not going to apply for the PPP. And the EIDL is the perfect loan for them to apply for in that case. We believe you should still apply for the PPP, and Matt, you can address that in more detail.
Yeah. Pat went into this in detail on our Friday call. The PPP, we believe the money's rolling faster. And the EIDL will allow you to refinance any debt after the economic disaster. So even if you can't get the PPP forgiven, you could refinance in the EIDL. And so there's no reason not to apply. Now let me go into a little more detail into that question for you. There is an FTE question, full-time equivalent question, on the application for the Paycheck Protection Program. And the way that, especially in the hourly employee world, the way to do full-time equivalent is basically a 30-hour work week. No total number of hours for the firm divided by a 30-hour work week to get your FTE equivalent, your full-time employee equivalent. And the important thing here is that the forgiveness has two components to it. One being your actual wages, not going under that 75%, but two is the actual head count that determine the amount of the forgiveness as a percentage. Now, there's some gray areas there, so I'm not going to go any farther into that. But for the Paycheck Protection Program, you will have to look back to your FTE, and that during that 8-week period, you can continue to pay your people. And if it was me, I'd pay them at the average wage that they were making prior that was associated to the actual loan.
This may be exactly what you just answered, but I'm going to read it just in case there are nuances to it. Hello, what is the proper way to calculate the number of employees field on the application? As a steel erector, various employees come and go throughout the reporting year, and many weeks worked are less than 40. Should we take the total hours worked over the reporting year and divide it by 40 hours, and then again by 52 weeks?
Not 40, it's 30. Is technically the full-time equivalent. So yes, I would take, let's say you're using 2019, I would take total number of hours. I would divide it by, I believe it's 30 times 52, I think it's 1660. So divided by this 1,660 hours, and you would have your FTE or full-time equivalent.
Okay, great. That's all the questions that we have so far, which speaks to the incredibly thorough job you guys did last Friday and again today. But we're going to continue to put information out as it becomes available to everybody, local unions, district council, and certainly the contractors. To you local union leaders out there that remain on the line, there's a number of them, and district council presidents. Encourage your contractors to apply regardless of whether they're running full bore or whether their business is tanked. And even on the impact board of directors with all kinds of contractors that are some that feel like they have not been dramatically affected and others that are completely devastated, they all should apply. And we have the subject matter experts available to them. And like I said earlier in the broadcast, we can address tax implications. Everybody gets the money and that's all well and good. But the reality is these will have direct implications on your tax filings. And one question just popped up. Says, before you go, my banker is telling me that the H&W, health and welfare, and pension costs should not be included in payroll costs. Is that correct?
No.
I disagree with your banker.
The banker is wrong, evidently.
The banker is wrong. In fact, the worksheet put out by the AICPA actually includes a line on there for you to put that in. So yeah, that definitely is it should be included. Now, once again, every bank is doing things their own way. Some of them are asking for things that are not required. There's nothing you can do in that situation other than to give them what they're asking for, even if the SBA is not requiring it, to get your loan through in the process.
Right. And a couple other questions are pouring in. Can our contractors email CARE Act email to get help too? Absolutely. Abso-freaking-lutely. encourage your contractors to email careact@impact-net.org any questions they have, and we'll funnel them. We have legal support, we have other business support, and of course we have Matt and Pat that will answer their questions very precisely and succinctly. Just like that misinformation that was coming from someone's banker. We've heard misinformation from CPA accountants saying, no, don't bother applying. This doesn't apply to you. The reality is it does. It applies to your contractors. Make sure they funnel their questions here so they don't miss the boat.
We should have done our public service announcement. With the changing things that are happening, it changes every day. The information we're providing now is as good as the information that we have, and it's always good to get other opinions.
Yeah, absolutely.
And to reiterate what Kevin says, Pat and I and our staff, we've dedicated a number of people to be available to answer this in case that the amount of influx of questions is high. We don't want to leave anybody left behind.
Another question: if a contractor has projects winding up under the PPP, should the company retain workers rather than, I think they meant lay them off rather than retaining them?
I tell you, it is going to be a very specific to each entity question and answer. It goes to one, motivation, two, the ability to keep your doors open after those contracts are up. Again, it turns into a loan. There's nothing wrong with a loan. And getting a 2-year loan for 1% is not the worst thing in the world. Now, there may be some other components of needing to keep those employees going. So I can't answer that without, really diving in.
Well, the spirit, and I can't speak for our lawmakers. I don't want to, nor would I. But it would appear to a layperson like myself that the spirit and intent of the PPP is to keep people on payrolls, not go on unemployment or other assistance programs. I'm just guessing here.
That is completely correct in my opinion.
So hopefully that gives a little bit of guidance. Should we provide substantiation, and parenthetically it says health and welfare and pension, for those numbers on a per employee basis, i.e. monthly union reports, so the reports that they supply to their trust that take care of their pension and health and welfare, which is health care?
The employer paid portion, yes.
And we're finding some of the banks are requesting that through the application process. In fact, we've had banks that requested bank statement showing your actual payroll for the last 12 months. Not just the payroll reports, they also asked for 12 months worth of bank statements showing that the money was coming out of one of the business accounts. So it depends on the bank. There's two parts of getting this information together. One part is, what do you need to apply for? The second part is, how do you defend yourself to prove that you had that payroll in place if somebody comes back and questions you?
Yeah, right. And undoubtedly someone will come back and question you at some point. Regarding PPP loan forgiveness terms, we will be incurring rent fees regardless of jobs going forward. So we're trying to determine how to proceed with the rehiring when the time comes. Do we need to have payroll costs and benefits on the non-payroll expenses? What happens if we use up to $250,000 on the other allowable expenses, but have little or no payroll expenses?
Interesting question. It's a very, very good question. And I'm going to give you my opinion. And if you want to reach out to us for me to dig deeper into it, my reading of the guidance is that 25% of your forgiveness is maxed out at non-payroll. By that terminology, I would assume you have to have payroll to have a percentage to be not payroll. Now, again, this is an opinion. This is an off-the-cuff answer without going in and really doing a deep research into it. But my concern would be is that potentially none, if you didn't have any payroll costs, none of your technically allowable other costs would be forgivable if you didn't have the offset of payroll.
Yeah, good
Well,
point.
and keep in mind too that there's two parts. Obviously, the real benefit of the PPP is the fact that you might get it forgiven, or you might get part of it forgiven. If you have little or no payroll costs, you may get little or no of the loan forgiven, which means you might want to refinance that into an EIDL loan. Or as Matt said, you have a 1% note that you could pay off over a couple years, which is not a bad thing necessarily. And if you don't really need the money, you could always pay it off early. There's no penalty to pay it off early.
Let me ask you guys a question, because based on the webcast last week, it really was very enlightening to me, because this is, not something we immerse ourselves with an impact. But is there any downside whatsoever to applying for the EIDL loan?
No, there is none. You have to, first of all, you have to be approved. It's not guaranteed. So you're going to have to go through the process. You have time, if you feel that you do not have substantial economic injury, you can turn the loan down. The only time where you might be taking some risk is, and the only thing I can think of right now is a liquor store, because they're all selling tons of product and they have, higher revenues than they've ever had before and higher profits. It's hard to show economic injury in that kind of a situation. But I can't think of any other business out there that doesn't have some economic injury that they've suffered.
Okay. And this is just a comment, and it appears that this might be the last word from our audience, is one thing to keep in mind is i.e. the workers' fringes, the iron workers' fringes, are paid if they are kept on the payroll instead of going on unemployment. This might matter to some contractors and employers and employees.
Great. That's a great point.
Yeah. You're going to have to pay that if they're on the payroll. It's just the way it is.
Yep.
So with that, folks, thank you very much. Pat, Matt, any last words?
I do. Just on something of note, people are now starting to receive their stimulus checks individually. There's been some misconceptions. To be frank, I had a misconception that I figured out today. Please understand that these checks are a future tax credit for 2020, which just means that this money is yours to spend, and will be reported and washed out in the 2020 tax filings. But there's some other positive light to it, and I want everybody to know this. For those that did not qualify, were over the earning limitation, if you go and file your 2020 taxes and you're now under that earnings phase out amount, you will then be eligible for this credit, and the money will come back to you. So there is the opportunity that even some people that did not receive checks, that they will, if this greatly impacts their income in 2020.
Yeah, I guess the last comment I would have would be more in line with the workshop that we were going to be doing for next week. There are a lot of tax benefits that have been added into the CARES Act that we have not touched on because they didn't apply to any of the loan programs. I did speak very briefly about some of the benefits that you got out of retirement plan loans and withdrawals from IRAs, but there's a whole different section about operating losses and other types of credits that people need to be aware of for this year.
Completely.
And I think I reiterate with what Kevin said at the last presentation. The three most important things are apply, apply, and apply.
It's just that simple. And it's like, going to the doctor. If it's, your business is super important, get a second opinion. go to your banker, go to your accountant, go to whomever, your lawyer. But listen, we have these experts and others that are not on camera today that are here to help you. So for crying out loud, avail yourself of that. Either, however you get in touch with us, we recommend the email. Everybody can get my cell phone number, email, whatever the case may be. The key is to keep our local unions and our contractors in business. Without that, we're completely out of business. And with that, again, on behalf of the Impact Board, namely Bill Brown and General President Eric Dean, really appreciate you guys getting on. And we look forward to working with you and seeing you next week when we delve into the tax implications. So thank you guys very much. You have a good afternoon.